Good evening, everyone, and welcome to Admiral Markets webinar. Today is 19th of November 2014. My name is Nenad. Today we will see MTF trading part 2, and after I finish with the initial presentation, I will show you a multiple time frame trading system which you can use, and I also have all indicators and templates ready. So for all of you who wish to receive this template and system, you can email me after the webinar and I will send it. Just to be sure this system is tested, it's good. It works on 3 different time frames, and basically it's very suitable for you who are also having your day jobs and are not able to trade each single day or scalp. So basically it will definitely suit you. I will make now a recording of this webinar also, so I hope that this webinar will be uploaded somewhere. If not, of course, you can always ask me for a template, and the rules will be explained in next 30 minutes. So let's start first with our standard risk disclaimer. Risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. Online education materials are developed by Admiral Markets as Estonia for a global audience. Therefore, please take into consideration that information in this session may not be suitable for everyone. To get a corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Admiral Markets UK Ltd takes no responsibility for the information accuracy. The analysis represents the personal opinion of the author, it's me, and in no way it represents the actual suggestion for the trade. These are not UK's opinions, and the website in the video is not the .co.uk website, but the globalnews.com website. Forex is risky business, and this is a personal opinion only. This webinar is for informational and educational purposes only. With having said that, we are ready to proceed. So MTF presented various time frames explained an MTF system. So MTF system will be the last part of the webinar where you will see how it's traded. So MTF refers to multiple time frame. Multiple time frame trading analysis refers to the same pair on different time pairs. So when we are talking about multiple time frame analysis, we are actually referring to the same pair but seen on different time frames. That is perfectly fine because trend exists on each time frame, and we need at least 3 scans of various time frames. And this is where this system, what this system does, it scans for 3 different and various time frames. And when it captures the trend, it will give you a nice and precise entry. Okay. Next, you all probably know that we use different time frames, and usually what traders do is they use different time frames for different trading styles. 1 minute to 5 minutes usually is scalping time frame. Traders usually exploit fast movements of these 2 time frames to get in the position quickly and get out the position sometimes even more quickly. 15 minutes is usually scalp swing template. Some traders call it scalp, I call it scalp swings. That is something in between scalping and intraday, because targets on scalping time frames are slightly higher than on scalping time frame. So scalp swings are definitely better in terms of potential pips. 30 minutes and 1 hour time frame, it's called intraday time frame, and we usually use these 2 time frames, usually 1 hour, to trade during the session or during the day. What we refer to intraday is that we open a position, hold a position in that single day. Sometimes and very often we close the position that same day, but we can also basically take 2 days of trading of the same position. But usually intraday trading is trading 95% of the time, where you open the position and close it during the same day. 4-hour or intraday or intra-week positioning trading is style of trading which exploits a little bit higher time frames. 4-hour intraday trading is basically a trade setup where you open your position during the single day, then you can usually wait for price to develop over next couple of days. That 4-hour trading is called intra-week trading. It's really suitable for traders who are having their day jobs and who are not able to trade the active hours just because they don't have the time or the willfulness to look at the charts, because I know that some people think that trading is boring. So if for you trading is boring, then definitely you should move to a 4-hour time frame. But it's not just about being bored or, I don't know, having a day job and so on. The thing is, 4-hour time frame trading is a little bit relaxed trading. You don't have to stress out. You usually use lower leverage to enter a position. You just don't have to monitor your trade all the time, and you can leave basically your charts running 2, 3, 5, 6 days, usually in between 2 and 7 days. Daily and intra-week, intra-month trading refers to trading on daily time frame, and that time frame is usually very prone to, I can say, a very long positioning, because if you open a trade on daily time frame, you will usually have to wait a lot for that particular trade to develop. I particularly never trade daily time frame. My time frame of choice is 1 hour, but of course when I scalp I do it on 5 or 15 minutes time frame, and 4-hour is usually used when I want to position myself. Weekly or monthly time frame, it's where definitely it's investment time frame, because on a weekly or monthly time frame you usually want to invest. It's not a time frame of choice for the people who want to withdraw the money regularly, so usually it's a form of long-term investment. Now, let's talk a little bit about advantages and disadvantages. 1 minute to 5 minute scalping time frame. The advantage is definitely it has a lot of chances. So if you want to go with scalping from 1 minute to 5 minute time frame, you definitely will have a lot of chances to enter and exit a trade. Also because you're scalping, and the scalping mindset is pretty much different to those people who take intraday position. There will be a less chance of losing trades, because usually even if you take 3, 4, 5 pips, you will close the trade. So it's a pretty much psychological way to trade. And the advantage is definitely there is no overnight risk. So sometimes it can happen that sometimes during the night there can be some huge news or some different, I don't know, usually nighttime is Asia session for me, so usually during the Asia session we might encounter some different news, especially for yen, Aussie, New Zealand, and definitely if we don't have a nice and big stop loss, we can lose a position. But with scalping, just there is no chance you can make an overnight risk, just because you will get in and get out of your positions very quickly. Disadvantages: spreads. First, the spread is the big disadvantage, because you need to pay more cost to pay the spread. Sometimes definitely scalping is not an option for pairs which have more than 2.5 pips spread, definitely, because scalping you aim for 5, 10, 15 pips, and if you have big spread, that is stupid. definitely. Don't scalp on pairs which have big spreads. Mentally difficult, definitely mentally difficult. There is a bias change, especially if you use the system which give you some sort of crossovers. Those crossovers can kill you because you will definitely be biased towards your system, which can signal you different entries. I'm preparing a webinar for January which will be about which trades do not take, and I will especially talk about those moving average, DNA spirals, and other whipsaw movement trades which you should never take. So that be sure to sign up. Be sure to sign up for that webinar, because I will show you which market, technical market, you should avoid, and I will use charts. So guys, don't miss that webinar. And definitely disadvantage with scalping with EMAs is one moment you think that the price will go up, then it goes to 1 or 2 pips up, and then there is a crossover which tells you to go short. So definitely moving average crossovers are not used on scalping purposes. Limited profits, everything can be. So you need to know how to scalp. There are good scalping method systems, but definitely you need to have a mindset of a scalper to be able to scalp. 15-minute scalp swings, advantages. There will be a lot of trade opportunities. Again, less chance of losing trades, because usually you will get in quickly, get out quickly. No overnight risk, and slightly better targets than scalping. You won't take 5-10 pips on 15 minutes. You usually will aim for some 15-20 pips, but it's effectively scalp swing. Disadvantage is, again, spread. You need to pay more cost, and you don't scalp swing also with pairs who are basically having spread more than 4 pips. And definitely you need to be in front of the computer to constantly babysit your trades. Okay. 1 hour intraday. The advantage of 1 hour intraday scalping, 1 hour intraday positioning is it's suitable for both full-time and part-time traders. Again, there is a less chance of losing trades, because you will be effectively using 1 or 2 or 3 days maximum per day. Bigger targets, definitely you can aim for 30-50 pips, and it allows you to use trailing stop. I'm not saying that you cannot use trailing stop on scalps and scalp swings, but not all the traders know how to do that. I already explained that in the webinar, how to turn scalp into scalp swings and scalp swings into intraday. Disadvantages, there is an overnight risk. You basically sometimes are not able to exit overnight, and that can be pretty much straightforward. You are in the profit during, let's say, Asia session, but you're sleeping. And just before Asia session ends, your trade gets even into a bigger profit. But then you wake up at London and you saw what happened. You were 30 pips in profit just to see that Frankfurt fake hit your stop loss. So the disadvantage of 1 hour intraday trade is that you have overnight risk. If you open your trade pretty much late in New York session, then usually that trade won't go anywhere, and you will suffer from overnight risk. And sometimes your trade is good, but because there is a movement in Asia market and that trade has been placed a bit earlier and it was meant to be intraday trade, well, sometimes even if you're in profit, other sessions such as Frankfurt fake can reverse your trade and hit stop loss. You are not able to exit overnight. Sometimes if you want to, what I do, it sounds a little bit weird, but you know, sometimes I have trades during the night. And when I see that my trade is positive during the night, I have my platform always opened during, it's 24/7. I have a PC, laptops, various screens, all sort of gadgets, and my mobile phone is usually closed. To me, it's on airplane mode, but definitely when I wake up during the night and I have, let's say, 3-4 o'clock a.m., I tend to look at the price, and if I see that I'm 15 or 20 pips in profit, I either close the trade immediately or I just place my trailing stop. But that is what I do. I just don't like particularly Frankfurt fake. Back in time, I used to trade Frankie fake, but my style of trading has changed over the years, and I definitely don't want to take any risk. So if I see that during the night my trade is in a profit, I would either place a stop loss, trailing stop, or close the trade completely. So I'm able to basically have a non-risk trade. Because usually movement in Asia session begins around 2:30 a.m. Central European time. That's 1:30 GMT now. And the big movement is usually around 4-5 a.m. GMT or CET, because traders are very active during that session. There is a profit taking, also accumulation, Asia, so-called Asia accumulation. And disadvantage is also if you trade multiple pairs, you need to pay for swap. Swap is overnight rate. For some pairs, swap is positive, but for majority of pairs, swap is negative. And sometimes it can make 3 or 5 pip difference to pay for a swap. And that is also a disadvantage if you leave your intraday trade during the night. 4-hour and daily trading, it's very suitable for part-time trading and limited investing. You will use bigger targets, you can use trailing stop, and you can also use pending orders. Disadvantage is again overnight risk, but there is also a macroeconomic risk. Bigger stops, swap if trading multiple pairs, and it's slow. You need to let your 4-hour trade going not just for a day, unless it really goes in a big profit, but for next couple of days. And you need to know what to do with, basically with 4-hour trading. If you're not into higher time frame trading, then you shouldn't try to trade it. Then, as I also said, swap can be pretty much anointing. You need to pay for swap if you're trading multiple pairs, and it's a bit of slow. Now let's talk about weekly, monthly. Weekly is investment time frame. So basically you would be investing in weekly. It's not prone to intraday movements. It's also news proof. You will have fewer transactions and less spread to pay, but trades on weekly time frame usually will take weeks, months, years. Sometimes it's big opportunity to those who want to invest, and it's great opportunity to invest, but I definitely am not fond of weekly trading. Disadvantage is, again, huge disadvantage is macroeconomic risk, because trend can quickly turn, can quickly reverse, and instead of making 5,000-6,000 pips of profits or 100 pips, you can go with 500 pips of stop loss, because on weekly time frame stop loss is huge. There is no stop or huge stop. Many traders who trade weekly or monthly time frame simply use no stop. They use time stop or equity stop. If they don't see their trade is going in a profit after 2 weeks, they can stop it, or they use equity stop, risking a limited percentage. Again, swap if trading multiple pairs, especially because weekly trading, you will have trades running and running. You need to pay for swap each single day. It's very slow. Trades also can take weeks, months, or years, and those weekly and monthly time frames are not suitable for traders who want to trade intraday, such as I do. I just don't like to trade higher time frames. Large swings can definitely put you out of trade even if you were in profit. You will make 1 or 2 trades for 6 months or a year. You definitely need a bigger account, and you will have a streak of losing months. So weekly, monthly time framing is too big. Now, why you should use multiple time frame analysis? But let's start first with aligning the trends. That is the most important thing why you should use multiple time frame analysis. The most important thing. For example, if you see that the trend is up on weekly chart, then you need to zoom into daily chart, and you can see that the trend is up on daily chart. Next time frame is 4 hour. You can start searching for opportunities on 4 hour time frame. It also goes like this on lower time frames. You can use one, let's say 4 hour to spot the trend, 1 hour to confirm the trend, and 15 minutes to enter within the trend. So effectively, when you align the trends, you will also be aligning the momentum. So if momentum is to the long side on daily 4 hour, you wait for retracement, loss of momentum on, let's say, 1 hour to enter the trade. So you are aligning higher time frame trend and momentum to the lower time frame trend and loss of momentum. Because if you want to enter, let's say you want to go up, you won't enter here or there, you will wait for a retracement to happen. So that is loss of momentum. We already talked about it. Retracement is nothing more than loss of momentum. You can also align the targets. So effectively, by using lower time frames, you will be using the targets on higher time frames. Aligning the stops, you can also align the stops to suit you. If you're trading, let's say, combination weekly, daily, 4 hour, you will be using not daily stops but 4 hour stops. And you can cherry pick entries. If you know what to do, you can really easy cherry pick your entries, especially when you do with multiple time frame analysis. Now, why you should use MTF? You're using higher time frame trend to trade the price. So you will be using higher time frame to trade the price. It's simply usable only within trend trades. It's simple logic because when you use multiple time frame analysis, you will be using higher time frame trends, higher time frame momentum to effectively place a trade within the lower time frame. So definitely only with trend trades. You don't want to take counter trend trades because on counter trend trades you cannot align the momentum and the trend. Counter trend is not trend. So definitely it's a trend trading method. The larger the time frame, the more likely and important support resistance levels would hold. So you always should base your multiple time frame trading on higher targets. Not the current time frame targets, but higher targets. 1 or 2 time frames higher targets. Now this is Mtf System, which I will be showing you now. It's pretty much straightforward. It's very effective, and the logic behind the system is pretty much good. As I already told you, if you it's pretty much simple. You can make your own template, but I did it for you. So if you want to use this Mtf system, of course you will send me an email. You know, every one of you knows my email address, torrentialfx@gmail.com, and I will send you the template. This system is effective, simple, it's adaptive. You will see it's pretty much adaptive, and you can customize it also to suit your own needs. You will see what I mean. Pairs traded, all majors, and some yen crosses. So Australian dollar, euro yen, euro dollar, cable, dollar CAD, dollar Swiss C, dollar yen, New Zealand dollar. And these are the indicators. We will use 3 time frames: weekly, daily, and 4-hour. Weekly is for major trend, daily is for intermediate trend, and 4-hour is for entries. 55 SMA for weekly charts, 21 SMA for daily charts, and 34 SMA for 4-hour charts. Okay, guys? For 4-hour charts. We buy when price is above 55 SMA on the weekly time frame. Price is about 21 SMA on the daily time frame. And entries on close of the next candle that touches and then closes above the 34 SMA on the 4-hour time frame. Sell. Price is below the 55 SMA on the weekly time frame. Price is below the 21 SMA on the daily time frame. Entries on close of the next candle that touches and then closes below the 34 SMA on the 4-hour time frame. I will use the examples, don't worry. Just let me finish first with rules. Stop loss placement. Now this is pretty much something new. Probably you haven't heard of it. But for aggressive stop loss placement, this system uses ATR. Conservative stop loss, you know about it. Above, below last 4-hour highs or lows. Aggressive placement, you go like this. First you need to, I already have, as I said, templates, so if you want to do it yourself, don't hesitate to do it. You need to put ATR 14 on your chart. And then look at those two numbers. This is high number of ATR and low number of ATR. You add the sum of 68 and 23. It is 91. Then you need to see what is 25% of that 91. It's 23 pips. So you place your stop loss 23 pips plus spread. So let's say if spread is 1 pip, then 24 pips below SMA at the point of entry. So let's say that your 34 SMA is here and you want to take short position. You just see where your SMA is and place, in this case, 24 pip stop loss. Or you can go conservatively. Let's say you made an entry here and your last swing high, because you want to go short, is here. So you need to place 5 pips above last swing high. Target profit is, you should always use trailing stop, and that you should practice to see what is the optimum trailing stop of this system. Target is open, or it uses standard price action targets. So target, you should leave open target because you're using trailing stop, or use standard price action targets. I don't recommend taking anything less than 20 pips. It will be usually 20 to 30, but not below 20. And sometimes you can grab a move of 100 pips. Target is open, so, and use trailing stop. Or you can use standard price action targets. You know about all of those lines which we used, previous swings, previous lows, whatever. So the template is set to show everything as described here. So let's see the example. Very, guys, easy. You know that I like easy things, profitable things. So this is pretty much straightforward. And the advantage is really it's very, very adaptive, and in the terms of placing targets. And definitely you should try it. Definitely you should try it. The thing is about this system, this template which I will be sending you is ready with everything. So you will see only on weekly chart, you will see only 55 SMA. When you open daily chart, you will see only 21 SMA. When you open 4 hour, you will only see 34 SMA and ATR. Okay, so you won't have many moving averages on your screen. So weekly 55 SMA, the price is below. So this, when we want to take a trade, we take a look. So I have taken this setup today. Look, weekly is below 55. Okay, sell. Done. Then let's move to daily time frame. Daily time frame, price needs to be below 21. Price is below 21. And 4 hour, this was the entry. The price touched, but on next candle it closed below because we want to sell. Weekly is below 55 SMA, daily is below 21 SMA, and 4 hour, look, it hit 34 SMA, close below. This is your entry, close. You place stop 18 pips above 34 SMA. Why 18 pips? This is aggressive entry. Aggressive stop loss. Add 49 to 22. 49 plus 22 is 71. 71 times 25% is 18. It's 70.75, but we usually round it. So it's 18 pips stop loss plus the spread. Let's say that ODCAT has 3 pips spread, so stop is 18 pips above 34 SMA plus 3 pips, so total is 21 pip spread from the entry. And usually your aggressive stop will be something around 25, 20 pips. That's good. And that is why you should not take anything below 20 pips. Okay? That is your entry. And you see what happened. After your entry, price went more than 100 pips. But I will use now real-time chart, but let's roll over to this again. I'm not sure that if the webinar will be uploaded. I think I'm recording it, but I don't know if it will be uploaded. So please memorize this slide because this is pretty much straightforward and yet effective. Okay? Try to memorize this slide, print screen it, I don't know, get a screenshot, and then I can move to real-time example. And you don't need any huge explanation with this. This is simple system, guys. And this system can really take you in profits. So, ODCAT weekly is below 55 SMA. Daily is below, price is below 21 SMA. ODCAT retraced and then closed back. So this is our entry. Touch of 34 and close back. Look. Stop loss, you add these two numbers. 49 plus 22 is 71. 71 times 25% is 18. 18 plus spread, so stop is 18 pips plus spread, so something around 20-21 pip after the entry. Okay, now let's see what a real chart says. For example, Euro-Yen weekly chart, let's say this candle. Weekly chart is to the upside. You see, above 55. Okay? Daily chart is at this point. This is weekly. I placed horizontal line. Daily is here again. It's above 21. And look at the 4 hour. It touched here. And this is also good when you see price doing this. Close below, then close to the upside. These are the best entries. And look at this. Let's see this line. Let's test it. This is the entry. Weekly, at this time it was above 55. At this time it was definitely above 21. And this entry was also good. Look, touch and close. This is what I like to see. Touch and close. But I'm not sure that this was the valid setup. This is good. Below, 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 then close to the upside. But let's see. Weekly, no, it was to the downside. Let's use another example. Let's use Euro-AUD. Let's use, well, we can use, why not this candle? Weekly below, daily above, so no. Let's scan. It's very easy to test it. Let's use this candle. Weekly below, daily below, and let's see 4 hour. Yeah, this was qualified trade here. Here, but let's see. Okay, here also, definitely this. Let's see if we can make it as the entry, or this candle. Weekly below, daily below, yeah, and 4 hour. So look at this. Close above, then close below. These are the best entries. We can take a look at GBP, but guys, bear in mind that this is not meant for scalping. And these are not usually intraday trades. If you want to trade this system, you need to leave trades running. Usually in next couple of candles, if you're in the profit, or maybe, I don't know, 10, 15 or more candles. So this is 4 hour trading, right? So usually you will, but because stops are not so big with aggressive, you can also take a profit after the price has made 1-to-1. But let's see GBP dollar. I don't need this now. Yeah, price is, let's say, weekly. Price is below weekly. Daily price is below daily. 4 hour, it's almost touching it, but it still needs to be touched. Look, where is your 4 hour SMA? Now this is tricky. This is very tricky. This is simple, a moving average, but this is very tricky. Look, we can say it touched it. It's 57.00, but we need to see 4 hour candle close. But look, now this is tricky. How can we consider this? Is this a touch or not? But maybe we can take the entry after 4 hour close with this system. Okay, but this, look, it's almost, but these are the best entries. Look, it goes up and close below. Look, this candle, guys. Why? Because look, it went above 34 and then closed below 34. And then you check daily, it was below. Weekly, it was definitely below. Look, weekly, daily, and look, bang, very good. So maybe you can take, because I don't think, let's say, for example, you want to take this trade, and definitely SMA is on 57.00. So let's say this was touched, and when this candle closes, if it closes below 57, we can try to take an entry. Now, how to calculate your stop? Let me pause the screen to just bring my calculator, please. Calculator here. Oh, okay, pretty much straightforward, guys. 56 plus 26. It's 82 times 25%. It's 21. GBP spread is 1 pip, so it's 22 pips, only 22 pips. Okay, but first you need to see this candle close. Okay, and if this stays the same, 22 pips aggressive, but it also can be a little bit, this would be conservative above this guy. Okay, but 22 should be enough for this. We will see what will happen. Yeah, but guys, as Justina is saying, it's FOMC today, so don't rely much on systems when FOMC is about to come. FOMC meeting will be done in 1 hour. So guys, 1 hour, you know, anything can happen. Please do not make any big positions. You know, FOMC does nothing, has not anything to do with technical trading. But let's see how it will go. But in this example, weekly, daily, 4 hour look. So this can be qualified, but just because of FOMC, I would be careful now. Guys, I think that you liked this, and you can see I have the template. You have only one weekly, it's 55. On daily, it's 21. On 4 hour, it's 34. And ATR is shown only on 4 hour. This looks very interesting to me, really, because, you know, sometimes, as I say, you don't want to take many positions during the day, and you can try to go with this. This is a primer of MTF trading, a good example of multiple time frame trading, and this should be basically the first choice of the traders who are not able to trade each single day. Okay? We will have maybe one of more of these webinars like this, and this is good because I always provide you with good methods, so you can always choose from. And I hope that you will make money. If you have anything to ask me, go ahead. Today, as I said, there will be FOMC. Euro-dollar gave us a nice breakout entry. It didn't touch these levels, but we had some nice movements on Euro-dollar today, really. We had almost 20 pips of profit if we traded, guys, this setup. This was good one, and it was happening 15 minutes after I post my analysis. But again, FOMC is today, so you need to be very careful. Next webinars are, as you know, we will have triangle breakout, inside buyer. Sign up for this, November 29th. Then tomorrow, recognizing my critical thinking is vital to avoid overtrading. Why you should avoid overtrading. And of course, weekly Forex recap, guys. This recap was also good. We basically had only one lot GBPN, but Euro-dollar cable of great trades. Question. I have a question about your trading with Fibonacci. Yeah, that is momentum trading. When you said Marubozu have to be at least 25 pips, that means 25 pips with spike or just body. You know what Marubozu candle is. I will show you what Marubozu candle is. Not related to this system, but Marubozu candle. Perfect Marubozu candle. I will show you, let's say, open one. This is good Marubozu candle. This one. This one is also good. This one is good. So this one is also good, but you need to have 25 pips in it. This one is good, 25 pips in it. But not with, yes, with a spike. No, what did you ask me? When you said Marubozu have to 25 pips in itself. Yes, 25 pips with a spike. You need to take account the spike, not just the body. Because, for example, you want to trade this candle. This is Marubozu candle, look. And how I do it. This is simple, guys. But you know, I always provide you with these are little tricks of traders. So take a look. Where it was rejected. In between 61.8. So you always need to take a spike into account. You would normally take this, and this was qualified entry here. But look. This is not Marubozu. The spike is too big. So this is Marubozu candle. This is Marubozu candle. Okay. Okay. Look, 88.6 touched, 78.6. So let's say you take your trade here, 40 pips. Okay. That is explained. Sorry guys, the screen was paused. Thank you for noticing. Now this is the example, okay? This is the example. Marubozu candle is this one, okay? You always need to take the spike into account. Look, so let's do it again. This is Marubozu candle, okay? Now insert Fibonacci retracement. Look, see 78.6 touched, 88.6 touched. Let's say you have entered your trade here, 40 pips, okay? This is Marubozu candle. Look, and look. Now let's get back to this example of GBP dollar. Let's use, now I lost my template. Yeah, it's here. It's here. Great. Let's use this example. So let's say that you want to trade GBP weekly, okay? Just for showcase purposes. I'm not saying that you should do it because we have FOMC, but just for the sake of this webinar. Let me explain you once again and we can conclude the webinar. Okay? So, GBP dollar. Weekly is below. Daily is below. 4 hour, let's say, touched this SMA. How to calculate your stop loss? How to calculate it? $56 plus 26 plus 26 is 82. 82 times 25% is 20. You add 1 pip of a spread, so 21 pip stop loss if this candle closes below. But as I say, this is FOMC, so you need to be careful. So this is how you would do it, okay? Like this. So I can see that everything is clear, guys. You just need to send me an email. I will reply with template. You can see my template looks like this. Weekly, 55 moving average. Daily, 21 moving average. 4 hour, 34. And on 4 hour, you have ATR indicator set as it should be. So guys, I hope that you enjoyed the webinar. This was MTF Primer. Yeah, really useful stuff. You can try to go with it, try to see how it goes. It's interesting, and you can see the best entries are always when the price breaks through and then closes below. You can go with touch and close below, but it's always the best when it breaks through and then closes below. Remember that. Thank you guys for listening to me. I will be here with you soon. As you know, I already showed you different webinars coming in soon, triangle breakout, inside bar, recaps, everything, which can be pretty much good for you. So thank you guys for listening to me. I will talk to you tomorrow. Cheers and trade safe.